Despite the surge in U.S. cooling demand due to high temperatures in the past weeks, nat gas futures have experienced a decline in lethargic trading conditions during July and early August. With gas prices resting below $3, it's tempting to become complacent about this energy commodity, which has the potential to swiftly become highly volatile. As the summer draws to a close in the upcoming weeks, the futures markets will shift their attention to the winter and the peak heating season. This period is traditionally known for being bullish and volatile for NYMEX natural gas futures. The forward curve shows prices above $3.70 in January 2024 and above the $4 level in January 2025. As heating demand increases during the coldest months, natural gas prices tend to reach seasonal highs. While the last winter was warm, there are no guarantees the upcoming cold season will be the same. Sanctions on Russia and Russian retaliation could cause sudden upside price spikes over the coming months if European natural gas demand increases and Russia decides to cut off supplies. Since U.S. liquefied natural gas travels worldwide by ocean vessel, a significant rally in European prices could lead to higher U.S. natural gas futures prices over the coming months. As we head into the second half of the year, traditional energy commodities are at levels where they will likely find support. The worst performing commodities during one period often become the best as prices drop to unsustainable levels on the downside. At least 4 factors support traditional energy prices as we move into the second half of 2023. Despite efforts in the US and Europe to promote alternative and renewable fuels and limit fossil fuel production and consumption, oil, gas, and coal still dominate global energy consumption, while India and China, with over 1/3 of the world's population, experience economic growth that drives rising fossil fuel demand as their governments do not fully engage in climate change initiatives to the same extent. OPEC Plus aims to achieve the highest oil price by balancing supply and demand while cutting production in 2022 and 2023, with Saudi Arabia needing an $80 Brent price to balance its domestic budget and Russia relying on petroleum revenues to support its domestic economy, and the ongoing war in Ukraine amidst onerous sanctions as the cartel utilizes its increased pricing power to maintain oil prices at their maximum with help from U.S. energy policy. The Biden administration addressed the 2022 surge in petroleum prices with unprecedented strategic petroleum reserve sales, leading to a significant decrease in the SPR from over 600 million barrels in late 2021 to 347 million barrels as of June 30. However, with the first purchase tender scheduled for August 2023 and the SPR at a 40-year low, the administration may face limited selling options if prices rise, potentially supporting oil prices as they are likely to buy below $70 per barrel. China and other BRICS countries have begun pricing crude oil in non-dollar assets. De-dollarization in the oil market could weigh on the U.S. currency's dominant role as the world's reserve foreign exchange instrument and petroleum pricing mechanism, causing dollar-based prices to rise. Now, keeping in mind the global energy picture, let's take a look at the natural gas perspective. The recent consolidation indicates that nat gas may have reached a significant bottom around the $2 level. Any war escalation in Ukraine could reignite Western European natural gas supply fears, leading to higher prices. Rising European prices will likely push U.S. futures prices higher. Nat gas is a highly volatile and seasonal commodity that will enter the peak demand season over the coming months. Price often peaks in November through January. Natural gas has a long history of price explosions and implosions. The odds favor higher than lower prices at the current price levels for the coming months. Moreover, there are no guarantees the upcoming cold season will be the same warm as the last one. Thank you for watching. Please like, subscribe and hit the bell. See you in the next video.